Hello there, welcome to Market Call. We are talking tech stocks with Kim Bolton, President and Portfolio Manager at Black Swan Dexteritas, and he'll be taking your questions on technology. Call us toll free, 1-855-326-6266, or send an email to marketcall@bnmbloomberg.ca. Kim, it's great to see you. I know you follow Alphabet closely, and we're hearing now that shortly the federal government will announce a deal with Google, under which Google will make annual payments to news companies of around $100 million. So Ottawa are trying to put this thing behind them.
From what I understand, it's a little less than what they were expecting, so good news for everyone.
Yeah, we don't know exactly how this will work, but certainly fascinating that Canada and other nations saying to these online giants, taxation's been an issue in some cases, but also alleged leaching of revenue from the news media.
Well, let's see. They so far this year, as of the third quarter, they had, I think it was around $83 billion in revenue, and 80% of that actually came from search. So $100 million here, $100 million there, right?
And Meta is still playing tough, though, apparently. We haven't got a deal yet with Meta. Let's put up maybe a 5-year chart for the NASDAQ 100 as a decent benchmark for tech stocks. So it's been a pretty good November, to put it mildly.
Yeah, up 10 or 11%. Although, look back, back in October it was down 5, September was down 5, it was down a little bit. So it sort of just got back to very close to those July 19th, 2023 highs.
Yeah, it's interesting. And it is. I mean, some stocks are still tech stocks are still well shy of their 2021 peak.
Yeah, a lot of the software stocks.
And Shopify is still down by half. But a lot of the chip names, hardware names are popular.
Yeah, and the Magnificent Seven are just dragging everyone with them.
Yeah. Has the market broadened out at all, or are we seeing decent performance from the rest of the stocks?
Yeah, actually, in the software as a service side, things have perked up. But that's, as interest rates come down, and the software side is very highly leveraged, a lot of debt on the books, so that's helping it out a lot, an awful lot.
Yeah, do you think, are we going to see a return to tech IPOs anytime soon?
Yeah, it's been very, very quiet, eh?
Yeah.
I think so, but certainly not in December. We'll probably have to wait for the new year.
Okay, we're going to be back with Kim Bolton. We're looking forward to it. He's President and Portfolio Manager at Black Swan Dexteritas, taking your questions on technology stocks. Let's kick off with an email here. JW is curious about computer modeling, and of course they're involved in helping oil and gas companies to assess their reservoirs.
Yeah, and this is a great Canadian name. It's out of Calgary, and basically, Andy, what they do is that they're a software application. But then they do reservoir simulation software that actually penetrates the earth, and they can help in actually defining what sort of reservoir they're looking at and the depth and breadth of it. Currently trading, around just shy of $10. This is an interesting one because the average analyst out there actually has a price target of $8.75, and here it's already through it. It's a good long-term growth story, a little bit cyclical because it is very much geared towards sort of the energy complex. So you could pick it up here. You could also look to buy it a little bit lower, sort of down around that $9 level and then $8 level.
Okay, let's head to Prince George, BC. Go ahead, Paul, please. I don't hear Paul. He's curious about Datadog.
Yeah. I always refer to the Datadog as sort of the lifeguard in the cloud pool, and it allows the other sort of software as a service side to work better with each other. And I'm just pulling it up here. So currently trading just above 117. And you'll probably hear this over the course of the program quite a bit, but it's things are pretty well priced. And so, the average analyst out there actually has the price target of $106, and so it's already through it. It has a great long-term story to it, and so, you can pick it up here. I'd wait to actually add to it. As we like to do a third. You could probably buy it just shy of 110, and then down at around 102. It shouldn't go under 100.
So this is when you're running a big IT system, you have data coming in from disparate sources, and they help you match it and also head off problems.
Yeah, it monitors sort of the entire technology spectrum within the cloud, and it allows for monitoring, fixing some issues, automation, and others. Within it's very much geared toward the hyperscalers, the cloud guys of Azure and AWS and Oracle and so on. They reported on November 7th. They beat in the top and the bottom line, but they also guided higher because they were actually saying going into that November 7th that the earnings going into Q4 was going to be about 34 cents, and they actually raised it up to about 44 cents. So all around, it was a great report. Over the last 100 days, it's up 21%.
Would you be a buyer then of the stock?
Right here?
Yeah.
If you own it, I'd hold on to it. I think you can actually add to it lower. Sure. If you don't have it now, yes, I'd buy it. But I'd leave some ammunition to actually pick it up, down toward that 110 level and then just above the $100 level.
Let's go to Montreal. Costa is on the line. Fire ahead, Costa, please.
Hello, gentlemen. Thank you for taking my call.
Pleasure.
Mr. Bolton, I heard you a few days ago discuss Lumine Group, Constellation Software spinoff. Would you rather I buy more of Constellation Software shares, the mother company, or more Topicus and Lumine, the spin-offs? How do you advise your customers? Because I love all three. Thank you very much and have a great day.
Thanks.
Yeah, it's interesting. So, Costa, thank you very much for your question. It's a great question because, you have the mothership of Constellation Software. You've had two spin-outs out of that. You had the Topicus, and then you had Lumen Group. Lumen is more geared towards sort of the media side of it. They had acquired like 19 companies, and then they'd become, they were part of that Valeris business unit of Constellation. It just became such a large part of the portfolio that they decided to spin it out. Now, mind you, Constellation, I think they own like 61% of it, so they still sort of are driving the bus here. What I would do, Costa, is if you have, I don't know, if you have $100,000, I'd put 60% of it in Constellation and probably another 25 in Topicus and 25 over in Lumen Group. Lumen's supposed to be sort of the younger of the constellation, a mini constellation. I'm just looking at, Constellation currently trading at about 3,200. It's already through the price target. Lumen Group is actually, I forget where it is, but I know it is actually under the under the target price. Lumen is probably a little cheaper.
Okay. All right. Thanks for that question. We have an email here from Robert. Robert is asking about super microcomputer. I love that name. Apparently, they're famous for servers for these giant data warehouses.
Yeah. So they're big into the servers and also into the storage side of it. So they develop and manufacture high-performance servers and storage solutions. You know, they compete on the server side with the likes of like a Dell or an HP. Mm-hmm. But they're smaller, a little more nimble, faster the market. You know, they target sort of the enterprise data centers, cloud computing, artificial intelligence, 5G, and also edge computing, which is a little bit different from that of like Dell and HP, because edge computing, which is basically putting the engine instead of back in the data center out closer to the locale where you're working. Mm-hmm. And so they have a bit of an edge there. So currently trading, I think it's around 286, 287, and has a nice runway. Got a 12-month price target of $375. So, you know, I'd suggest maybe you could pick it up here, add a little bit down around 270, and then down maybe just shy of 260.
Hang on, I got a bit confused with some of your numbers there. I'm looking at super microcomputer, SMCI. Yep. Am I getting mixed up here, SMCI? So I have, okay, yeah, I'm looking, I think there was some anomaly with our chart, yeah. So the stock trading at about $290 right now, SMCI. Sorry about the chart, I'm not sure what happened.
But it has a good long runway up to about 375 from there.
Up to, okay, from about 290 right now. Mm-hmm. We're going to be back with Kim Bolton, President and Portfolio Manager at Black Swan Dexteritas, taking your questions on technology stocks. We are talking tech stocks with Kim Bolton of Black Swan Dexteritas. Andre in Chilliwack, BC. Go ahead, please.
All right, fire away, Andrew. Thanks for taking my call. Could I please get your thoughts on Larry Ellison's company, Oracle? I have a few shares. What is your 12-month price target? And when are you going to bring Yuri on, Mr. Bolton?
Oh, the famous Yuri, your analyst.
Is he a computer or is he a real person? Good day to both of you.
Thanks.
Thanks, Andre. You got to tell me about Yuri later. Thanks, Andre. So currently trading right around just above 116. It's getting close to the 12-month price target, sort of the average of the analysts out there of 126. We actually have a 12-month price target of 132, a little bit higher than that. You know, when it reported back in reported on September 11th, and then it's coming up actually. So when they reported back in September, mm-hmm. they actually, so they beat in the top and they beat in the bottom. But then they were very, very conservative, unknown about the environment going forward and so on. And so it just sort of took a breather, which was actually a good thing because it gave an opportunity for people to actually buy into it. So Oracle, as a lot of you would know, it's a behemoth when it comes to information technology. It has the cloud side, it has the hardware, and also has the software services, and therefore can cross-sell all across it. Mm-hmm. It's actually built up a lot of partnerships, certainly around the AI, and the AI is integrated within this thing called the Oracle NetSuite. And it's actually powered, of course, by Oracle Cloud Infrastructure and so on. So I would buy it, Andre. It sounds like you own it. So I would hold it. I wouldn't sell it here. You might want to look at it sort of up in sort of the mid-120s, maybe trim it off a little bit. But I'd add to it down at 110. And I don't think you'll see it certainly under 100. Maybe buy it at 110 and also at 105.
Oh, okay. We have Ron sending us an email. Ron wants to know about Palo Alto Networks, the security giant.
Yeah, thanks, Ron. So Palo Alto currently trading at just shy of 290, and I'm just pulling it up. We have a 12-month price target of 302. So likewise, it's almost fully valued. You know, the 12-month average price target out there of 302. It's an interesting group. And it's really sort of caught up with sort of the niche players of the CrowdStrikes and the Fortinet. And the main reason for that is because they have a great suite. You know, a lot of those CrowdStrike and Fortinet type companies are very, very much geared toward larger enterprise. Palo Alto is great for sort of the small and medium-sized
even though it's
companies.
even though it's an industry giant in itself.
Absolutely, because it's been around for such a long time that they can slice and dice what they have. Now, their big sort of offering out there is within firewall security, which is a big deal, certainly for small and medium-sized companies. So. You could buy it here, but I'd keep some powder. I think you'll be able to buy a little bit lower.
Okay, hold on for now. Lawrence in London, Ontario. Go ahead, please.
Good afternoon. Thank you for your suggestions in the past, and I've done also very well with your own company's inventory. I'm looking at maybe buying more Microsoft. Do you have an opinion on that?
Absolutely. And I'm just pulling it up. There we are. So with Microsoft, so currently trading around 378, yeah, and we have a 12-month price target of 397. You know, where do you start with Microsoft? They have the whole thing going. But the flavor of the month right now is within the whole sort of AI side, and they just came out with the Maya 100 AI chip, which is developed under the sort of the code name of Athena. Really interesting thing that they're doing, because everyone is buying from NVIDIA for the multi processors. But Microsoft announced that they have this AI chip that is as powerful as NVIDIA, and it's actually based on a 5 nanometer, and it's processed over with Taiwan Semiconductor. It has 105 billion transistors in their chips. There's a great YouTube, and I was actually watching it last night, that actually talks about the Athena project that Microsoft is doing. And, the Maya 100 under the Athena has been tested with GP 3.5, and they're using that actually to power up their co-pilot of GitHub. So it's a big game changer out there. So that everyone's trying to build the big Magnificent Seven. They're trying to build their own AI chips so that they're not so beholden actually to NVIDIA. And so Microsoft is the first one to come out. But of course, Microsoft has everything else behind it. It has the Azure, which is a cloud, which is the fastest growing out there. It has the productivity and business processing segment. As everyone knows, they announced that whole thing with the 10 billion investment. It was actually the third investment that they did into OpenAI. They reported on October 24th. They beaten the top, beaten the bottom. They raised their guidance, so they have everything going. I would buy it here, just around sort of that 378 level. Save some powder to buy it down around 358, and then maybe just shy of 340.
Okay, we are going to take a quick break. When we come back, we will take a look at Kim's past picks. You're watching Market Call.
Making sense of business and the economy can be tough. We dig through the details to tell you what you need to know with straight talk and expert analysis so you can make informed decisions about your future.
Taking Stock, Fridays at 6 p.m. on BNN Bloomberg.
Kim was on our show last December 21st. Thanks for joining us so close to the holiday. Nintendo was your first idea. Let's see how that one fared. Of course, one of the great names in video games. So up over the period.
So currently trading just about $11.50. The 12-month price target on this, the average analyst has it at $12. So it actually, I think it trades on an ADR. So there, the business model is dedicated toward game consoles, mobile games, IP licensing, and so on. But Andy, they're also the originator of that Karuda playing cards. It's a big Japanese playing card. So the company actually started out over 100 years ago in the gaming side, but it was with these Kurata playing cards. It's an interesting story, and then they've sort of grown with it. The Nintendo Switch, which was released back in 2017, was the third highest selling console of all time with over 132 million units. Second to Nintendo DS, and number one is the Sony PlayStation. It has fantastic labels behind it. And even the new ones that are coming out, Legend of Zelda and Super Mario Brothers Wonder and so on, they're getting into this, moving away from licensing and going into a subscription plan lineup, which will help them in the longer run, but you're going to have to sort of wait for it. So if you own it, I'd keep it. Maybe add to it down toward about $11, and I don't think you'd see it much under $10.50.
They used to be so big. I mean, the Wii machine, but have they lost status or lost ranking in the video game sector?
Well, they're still a $60 billion company.
Right.
So, but it's, compared to, the Sonys, and now, of course, you're going to have Microsoft come in and try to cut their grass, too.
After their big acquisition.
Yeah.
Apparently, it did very well with Super Mario, the Wii, and Legend of Zelda, but then couldn't attract that many third-party developers. Had trouble doing that. ASML holding a big Dutch maker of equipment for manufacturing chips. A nice gain on this one.
We've held this, for the whole year. This is so... ASML, as you mentioned, Netherlands, German, and they produce advanced semiconductor equipment systems. Very much geared toward the lithography side of things. And so they're one of the main suppliers, actually, for Taiwan Semiconductor. The lithography, their current system is an extreme ultraviolet lithography machine. Taiwan uses it, Samsung, Intel, all the big guys. Commitment to memory customers on that lithography side. They reported on the 18th of October, and they beat handily on both the top and the bottom lines, and they actually raised their guidance. One of the things that is very, very makes the rest of the industry jealous is that their gross margin is 52%. And so you could buy it here. I think I'd sort of save some powder to maybe perhaps get it down around 650 and 620. Just sort of stepping back, though, the whole semiconductor landscape, pricing and inventories have really been an overhang on the market, but they've sort of worn them off over the course of this year. Most of the semiconductor companies are expecting prices to go up, and now that the inventories have sort of been whittled down, they're in a good space going into 2024.
Okay. It looks as though the Netherlands might get a more conservative government, and that will be less open to immigration. And apparently ASML is warning of the danger of that if they can't bring in skilled workers and students.
That's right. That's right. They are building, I forget where they're building it, but they're building a big plant in the States to actually get some of that money that comes out of the Semiconductor Act. And so, yeah.
PayPal. Let's see how this one did down.
Yeah. I guess the reason it's, we still own a small position in this in the fund, and actually a few positions through the separately managed accounts. They're a leader when it comes into the transaction and payment processing side. And it's sort of like, Adobe has a business unit that is actually a verb in our language with Photoshop, but, PayPal has a verb, which is Venmo.
Oh, yeah.
And Venmo has actually taken off extremely well over in Europe, but it really hasn't got as much traction over here. So it's currently trading, around $56, $57. Have a 12-month price target of 85. A lot of the investment houses have this as a conviction buy because of the runway and its leadership. We still like it. We own less than 1% in the fund. The reporting has been great. They have this. They have the new CEO. His name is Chris.
I'll look that up. Yeah, go ahead.
And he came over from Intuit, and he just went through his first earnings.
Alex Chris.
Yeah, yeah, right. Alex Chris. And it's he doesn't have the sort of the baggage of what some of the other guys had when they were there. He's taken a fresh look at it. He's trying to make the place more efficient, more effective. And so, it reminds me very much of when Gesslinger came into Intel. And it took a little while, but eventually he delivered.
Okay.
So I think so, yeah.
We're going to continue after this. Kim Bolton, President and Portfolio Manager at Black Swan Dexteritas, is taking your questions on technology stocks. 1-855-326-6266. Welcome back, and let's head over to Welland, Ontario, where Jimmy is standing by. Jimmy, fire ahead, please.
Hi there, Kim. We talked on a previous segment about Intel, and your narrative was quite general, with an overview of some friendly comments. But I'm looking at kind of an inverted tax credit pyramid. Are they making any money? Where are we headed with Intel, INTC?
Yeah. Thanks, Jimmy. I'll try to be a little more specific. So we're sitting here just around 40, just over 45. Jimmy, we have a 12-month price target of $50, so it's almost priced in. In other words, I think you can probably buy it a little bit cheaper, although it has become a bit of a favorite of people out there. And the main reason, Jimmy, for that is that Gesslinger, the CEO, and he's also the most highly paid CEO in the semiconductor space, he's finally started to deliver. He had a long-term plan, and he had some sort of skeletons that they had to deal with. But it's actually coming together, and he has a great suite of products. You know, he has sort of it operates through the client computing group, also through the data center side and the AI, the network and the edge. They have Mobileye. They have the whole Foundry services side. So I really like this. However, it's already sort of moved. You know, it was only about a month ago it was down in sort of the high 30s, and now here we are sort of sitting in the mid 40s. You know, they reported on October 26th. Expectations were that they were going to deliver about 21 cents, and they delivered 44 cents. They were expecting revenues at $13.5 billion, and they came in with 14.2. And then they raised their guidance. So everything is actually coming together. Mind you, year over year, growth is a little bit down. But yeah, Jimmy, if you own it, I'd hold on to it, but I'd leave place to actually buy some more down around 42 and also maybe possibly around 40. I don't think you'll see it go under 38.
We've got John calling from London, Ontario. Fire ahead, John, please.
Andrew, thanks very much. Great show, great guests. I am seeing tech stocks bursting forth from their captivity, even poor little PayPal. And I see at the helm Kim Bolton with his rod and his robe leading them onwards and upwards. Palantir, is it heading up?
Thank you very much for the call. Currently sitting just over $20. It's pretty interesting that the average analyst out there has a 12-month price target of $14.
Oh, hello. Wow.
So it's really done extremely well. I remember when it actually came out on an issuance. They did a direct issuance, and it sort of came out. I think it was around $17. It scooted all the way up to just over 30, and then everything unraveled, and you could actually pick it up about a year ago, probably down around $8. So let me just sort of back up. Palantir has two sort of analytical platforms. It is the place in Silicon Valley where the smartest of the AI people want to end up. And they have sort of two platforms. One is for the government, which is called Gotham, and the other is for enterprise out there called Foundry. So it's nice to actually have two horses in the race. The other one that I'd perhaps recommend that you look at is Alteryx. Alteryx is a really, really good.
What's the symbol on that one?
AYX.
AYX. Okay.
I'm actually going to talk about it later on the top picks.
Okay.
It's cheaper. It's a competitor. The only thing that Alteryx doesn't have that Palantir has is that those government contracts. And they have government contracts, in the U.S., over in the U.K., even in Saudi Arabia. And there is enough room for a lot of players in this sort of data analytic playground because they figure the total addressable market is about $120 billion. Now, Palantir, because it has these corporate customers, the average contract length is almost 4 years, which is a little bit longer than Alteryx. Now, top 20 customers actually have an average length of about 6.5 years. So I would own it here. I think you can probably buy it a little lower, down around 18 or 17, but it certainly has some momentum behind it because of this whole AI euphoria.
Okay, thanks very much for that question. We're going to take a break. Kim Bolton is fielding your questions on technology stocks. $7 billion. Yeah. Okay, sorry, we were discussing stocks there, as one does. Let's head to Glenn in Burlington, Ontario. Go ahead, Glenn.
Yes, hi, gentlemen. Thank you very much for taking my call. Just wanted to get Kim's opinion on OpenText. I see there's some information on it coming out on the wire today, and it seems to be up a little bit. So what's your price target on OpenText, and what do you think of it for the future? Appreciate your information. Thank you.
So OpenText is selling its so-called application modernization and connectivity business for $2.275 billion in cash.
And I think the reason that the market likes that is because they bought that Micro Focus group for $6 billion.
Right.
They thought that they had overpaid, but they also had to borrow on that. So this is good news that they actually have spun off something to actually lower the debt side. Glenn, currently the OpenText is trading at 55, a little more than 55.5. It's getting a little pricey because we have a 12-month price target of $58.50. So OpenText, in the eyes of Gartner, which is the world's largest tech research firm, they place OpenText as a leader in their magic quadrant when it comes to content services platform, and they develop and sell this thing called EIM, Enterprise Information Management Software, which basically digitalizes processes and is very much geared towards supply chain analytics. It also has a lot of AI solutions in there, and they've very much been delivering. And most importantly, the stock has finally got some momentum behind it. Yeah.
Okay. We have Gulam in Toronto. Go ahead, please.
Hi, good morning. My question for you is on two ETFs that I hold, a very small position, the ZQQ and the SOXX. They've done very well. I was thinking of adding to my position, but listening to some analysts, they reckon they're going to reduce their portfolio or their portfolio in technology stocks in the next month or so, and then add back. Do you see much further upside on it, or what's your opinion on it? I'd appreciate it. Thank you.
Thanks, Gulam. Well, and you've heard it from me where a lot of the technology stocks are approaching, price target. What should I do? I always recommend that you should write some calls against it, and just get a little bit of you have to actively manage it. But if you own it, if you own the SOX or the triple Qs. You could write some calls against that.
Can you do that on ETFs? I didn't even know they were optionable.
Over the counter, yeah.
Oh, that's interesting.
Yeah.
Okay.
So, we do it over the counter. So, yeah, that's what I do. If I were to pick between I think the runway for the SOX is probably a little bit longer than that of the triple Qs.
Oh, okay. And okay. Thanks very much. We're tight for time. Sorry about that. Let's squeeze in another caller. Henry in Sydney, Nova Scotia. Go ahead, please.
Yes, thank you, Andy.
Pleasure.
Great show. Kim, I know you're tight for time. C3AI, if you could give me your advice on long term, Kim.
Thanks.
Yep. So currently trading at, $30.50. We have a 12-month price target of $36.50. They just have a little bit of a track record of not being as predictable. So I think when it comes to the AI side of things, there are better opportunities, more solid opportunities with the likes of a Palantir or an Alteryx.
Oh, okay.
That's my thoughts.
We have got to leave it there, but we're going to have Kim share his top picks coming up next. first idea, as previewed, Alteryx, AYX in New York. So part of its shtick here is any data worker can work with the streams of data organizations take in.
Absolutely, and you don't have to be a coder.
Okay.
Right, and so not only that, but you know, the whole data analytics side is only as good as the data that you own, and so the benefit of Alteryx is that you can have data in different locations. It can gather it, assimilate it into one package, and then do the sort of the data science and analytics behind that. And so you know, the software is designed to make advanced analytics accessible to any data worker out there. But you know, it's a young company. It's only a $2.7 billion company, and it was very, very leveraged. And when interest rates started to go up, they just got clobbered. But you can see it on the charts that it's actually sort of found good grounding down here, and it has a great long runway. So certainly right now sitting around $38, and we have a 12-month price target of $69. So it's a great runway.
Accenture is your next idea, a consulting company. A lot of its work IT these days.
Yeah. I forget who told me, but it's in one of the top 5 employers in the world. It has 732,000 employees under Accenture's. You know, it's a behemoth when it comes to consulting and outsourcing. It has partnerships with all the big cloud guys of Microsoft and Oracle, Amazon, Google, and so on. It includes more than 75% of the Fortune Global 500, 97 of the top 100 clients in the S&P. And to boot, it's got a 1.5% dividend on top of that. And they're not letting down. Actually, this year, they've already done another 19 acquisitions. They just came out. I haven't been to it, but they do have one of these AI studios here in Toronto. So they have these Accenture Innovation Hubs in Chicago and Houston, New York, San Francisco, and Toronto, and also in Washington. They just got into a partnership with Salesforce. Salesforce, of course, bought Cerner, and so they're very much heavily into the life sciences side. And as I mentioned, you know, they're into the whole generative AI collaboration with everyone under the sun. So current, and you can buy it here. I think I'd add down around 316 and also down around 300.
That's amazing, isn't it? Yeah, as of August, 733,000 employees.
Yeah. I actually was very, very fortunate, and I had a meeting with a few other analysts with Julie Sweet.
The CEO, yeah.
The CEO. So they have a leadership team of a few dozen, and they're spread all around the world, as you can imagine, with that many people. And so they actually they don't have a head office, but their leadership team actually gets together on various Zooms and Zoom and Teams, and they all have avatars. So they actually, you know, walk the talk and talk the walk.
Finally, Samsung Electronics. A Korean flagship company. What do you like about them?
Well, you know, going into next year, who knows what the landscape is going to be like within the Western world. I think the hard times have already been felt within sort of China and Asia, so it's a bit of a bet on sort of the Asia-Pacific area. But Samsung, you know, it's a mammoth company, and you know, they're second to Taiwan Semiconductor as a foundry. Now, Taiwan Semiconductor has about 59% share. Samsung has 13% share, but their idea within the next 5 years is to actually double that.
You don't hear much about them as a chip maker, Samsung.
Yeah. Well, they're the world's largest DRAM chip maker, which is the memory side.
Okay.
And so even Apple jobs out a lot of their chips to both Taiwan Semiconductor and also to Samsung.
Mm-hmm.
So they have a great suite of products. They just reported, great report. They're also very much talking about, the cyclicality of the semiconductor space, and that the prices are sort of bottoming, inventories are bottoming, and so they're actually painting a very nice picture going into 2024. Now, this one is not on an ADR. It trades on the London Stock Exchange.
Sure.
So under the symbol of SMSN. So you can buy it here around 1360, down around 1300, and then about 1200.
Kim, thank you very much indeed.
Okay.
Kim Bolton, we are out of time. Thank you very much indeed for watching Market Call. And we're going to have another great specialty show tomorrow. Andrew Moffs talking about real estate stocks. Have a great day in the markets.